All right, good afternoon, everybody. How's it hanging? What's up? 10 after 4 on September 25th, Eastern Time. Good to see you guys. What's up, Eddie? Bill, Tate. What's up, Bandit? Rose Petals and Joanna. Good to see you all. What's up, Eddie Vic? All right, cool. Let's dive right in, lest I fall asleep. What's up, fam? Just definitely recovering from, you know, being out till 6 in the morning Eastern versus this morning waking up at 6 in the morning Eastern. It's a pretty hard, quick flip. I might as well have flown to China instead of Las Vegas. What's up, Tom? All right, let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. So last at a meeting, I'm no longer in Lucid, which I could care less about. I didn't really like that position anyway, but was in the trade. It was making me money, so I had to follow through with the game plan on that. Gave back a bunch of P&L and stop myself out. I did stop myself out of KRE last week also, which is one that I didn't want to stop myself out of. I like that KRE trade. But risk management. Sometimes you got to stop yourself out of things you don't want to stop yourself out of because risk management is the most important part about the business. I re-entered into some Pinterest today, which I kept overnight, real small, and Amazon and Google. So that is the updated position disclosure. Let's go over the chart. So, um, technically today is an RDR. We closed okay. SPY's up 0.4%, Q's up 0.5%, the IWM up 0.5%. We got a nice little leg here of this rally in the last 5 minutes. I think gave a good close, pretty much at new highs for the SPYs. Same deal with the Qs. Last 5 minutes helped boost the index to pretty much close at highs, and the IWM not quite the highs, but also had that last 5 minute little bounce there. Um, Considering that, the market's up 0.5% and that we had this RDR today off of lows, this looks like a decent daily green candle, though the volume on it is very low. It is also an important Jewish holiday today, so I think that there's a lot of market participants that were not involved. But considering that we had this nice little RDR on this day four to the downside, I actually didn't think it was a great trading session. And maybe that's just me, and I need to catch up on some sleep. But I thought that the intraday price action was really very boring. We had a good opening bounce, and the follow through after that opening bounce was, I don't know. I didn't. It wasn't like really exciting, great price action today, like I want to see on a day four gap down that leads to an RDR, right? And that's what today was. Day four gap down. Market broke down really hard last week on the Fed on Wednesday. Got follow through on Thursday when I was flying to Vegas, and then Friday I was kind of in and out of my hotel room, checking in on the market a little bit on Friday, and it seemed like it was a bearish consolidation day all day on Friday that rolled over into the close and had us close on lows. So it was a day three down. I remember during the day thinking we were going to get an inside day, and I thought that that would be bearish. And then not only did we have the rest, but we actually had the rest and then closed on lows. And then today for our Monday, we gapped down. So, day four gap down. Our extension at lows this morning, we're at like 428.72 with the ADMA at 437.26. So not $10 worth of extension, which is where I get really excited to start building in on the other side. But getting there, we were getting there pretty close to the point where if we actually could have had a little bit of an opening sell-off, um, I think that it would have led to a better opportunity, but we didn't get that. We had a decent common gap down this morning. So what I was saying was, it's a common gap down that we're going to open up, extended the downside on the small time frame. We're extending the downside on the big time frame. It is a day four, so this is a day that you generally want to be a buyer. You don't really want to be pushing the short side. We're starting to get to those more extreme levels of extension. But honestly, more ideally, sometimes when you get that gap down, it leads to some sort of panic selling or early selling of people that are stuck in positions who need to kind of puke out of them a little bit. And if that could have happened, it would have created an even better buying opportunity. But it didn't. We pretty much rallied off the open and filled the gap. You can see that here with the spies. One quick 5 minutes that was a little bit bearish, but then we rallied off the open, filled the gap. Q's same deal, rallied off the open, filled the gap. IWM the IWM strength in the beginning of the day was actually very encouraging. That it was able to push through the gap fill area, push through the short time frame equilibrium area, and get back up to 177 quarter like that had me pretty excited. And I was really trying to be optimistic because most of the time, you're in a bearish market. Granted, we have a lot of extension, but not extreme extension. So you could have had a situation where you rally in the beginning of the day like we did to fill that gap to satisfy the small time frame extension, but then the big picture weakness takes over and we're not like quite extended enough on the daily chart to really get that follow through. So we kind of had this pivot high come in at 955 and roll all the way down. So I thought that opening lows was really important and this first high was really important. Once this first high kind of came in and we began to pull back, the question in my mind was like, okay, are we going to get the higher low, higher high? Which, if that could happen, and it eventually did happen, it just took a lot longer than I was looking for. I wanted it faster to get more follow through intraday on the market. Like, if we could have created a really quick pivot low at 10:05 and then made new highs, or even this further little push to 10:25, that becomes the higher low, and then we very quickly make new highs. That would have gotten me pretty excited to see if we get some upside follow through in the market. Just now you've got a higher low, and the bulls in the market are showing that this is more than just an opening oversold small time frame bounce to satisfy gap down extension. That it's working in a bigger way to try to satisfy more of that daily chart extension. But I just wasn't getting that confirmation. We were holding lows, we weren't breaking lows, but I wasn't getting that quick higher low, higher high that I was looking for to give me conviction to the upside. And then eventually that happened after 11 o'clock, as we were, approaching getting into the European close time. We finally were able to catch a bid and break new highs. But even that, it kind of led to nothing. We didn't clear out any of the major levels from Friday on the upside, as an example. So going back over to the daily chart, yes, technically it is an RDR. We gapped down this morning. We traded back through yesterday's low and we closed okay, considering that we had this strong little rally right here into the close. But I didn't think that this was like a great trading session, which is what I said earlier. It was like, okay, like good opportunities to buy early on in the day. And then if you sat on those positions all day, you got a little bit of extra P&L thrown in your direction into the close. And we'll take what we can get if you're on the long side of this market, considering how hard it's been to be long. Well, really ever since options X hit, that September options X hit, and then the Fed hit. We'll take what we can get, but I just kind of overall thought it was a disappointing trading session. And outside of buying the open or buying versus that opening low, I didn't see a whole ton to do out there today. I felt like I spent most of my day in wait and see mode. Can we really break up? Can we really get going? Or are we going to roll back down and break opening lows and continue daily chart selling? And neither of those things happened. And I do think that the best opportunities today really came in the beginning of the day. They came from focusing on relative strength. I spent, most of my day really focused on the big cap tech stocks and a little bit with ARK, though ARK was another one that was kind of disappointing. So that's just a small time frame on the SPY. Small time frame on the Qs was the same deal. Your opening rally overshot decently. You got this upside tail here at 955 through equilibrium, through the gap fill, pull back, looking for the higher low. It doesn't really happen, and then eventually post 11 o'clock, it does, but now we're in midday trading chop, and there was kind of nothing to do. And then IWM excitement I had in the beginning of the day from that strength also kind of gave way into nothing. But at the end of the day, all three of these indices that I like to look at did give RDRs. So there is room for them to bounce further. And technically, that's usually what happens. I do wish that there was higher volume today for confirmation, but I'm going to take the low volume today with a grain of salt because the Jewish holiday tends to lead to lower volume. So we'll see, if we can have this be the beginning of a price correction that snaps us back to equilibrium on the daily chart, space between the 8 and 21 EMA, and then we'll see if bears regain control from there. There's no doubt about it on the small time frame here for the market. Now that we lost some of these key support levels, we lost 440 in SPY was really important. Then we lost 335, which was important. Then we lost the August low, which is 431. You could probably say, if we want to do our little bullish bearish neutral game that I like to do, you could still say what I've been saying, which is that the intermediate time frame is neutral. Though if we stay down here, it could actually flip to bearish. I would say that the intermediate time frame is still kind of neutral. It's still kind of range bound, especially if we can be above 433 in the spies. The small time frame has resolved in more of a bearish manner, and the large time frame for the spies is still bullish. We still have a rising 200 day. It's just taken a long time to digest what had become an abnormally large spread between the market and the 200 day at the end of July. Um, so yeah, spies, Qs are still intact. Same deal, same time frames. The IWM is much more concerning. It's been much more concerning. Small time frame is bearish, and I would argue that the intermediate time frame is probably also bearish, and that the large time frame is not bullish; it's neutral. So the Russell has been representing kind of a real problem here for the market. So yes, that's the indices. My game plan for today was to be very market focused because it was a day four gap down. I wanted to see where relative strength came into the market and focus on that. I think that a lot of that relative strength was in big cap tech today. Amazon was a pretty good winner. Pat was all over this. He had a great call this morning on the long. I was involved as well. Um, you could see the relative strength for whatever reason, even pre-market in Amazon, it was green when the rest of the market was red. That second 5 minute bar of the day was really strong. I think Pat was looking at the buy. I don't remember what he said, through 129.50, 130, something like that. And it was one of the better ones out there, though I would still argue it was a little bit disappointing that you couldn't get a move to 133 in this thing off of a real RDR, get back above yesterday's high and what was the strongest stock that was out there, and that didn't even gap down this morning. But that was one of the better ones. Google was a focus for me as well. Struggled to get through 130 a little bit off the open, but then was able to push through and grind higher. I thought it showed really good strength, consolidating in front of that 130 before kind of breaking up. Microsoft was trickier. I know Chris liked this, and there was some good flow in that today. This is another one that I was buying today, but the break of that opening low I think made the Microsoft execution a little bit trickier. So Fang was a large portion of my focus. Apple being strong right off the open. I remember calling out I think a long off that opening low in Apple was also a pretty good one. So Fang names became a big focus. ARC was a bit of a focus. I called out a long on the way up through 38.50. So basically what I did there was I just put a buy stop at 38.50 or maybe 38.51, I don't remember. And it's like I said in the morning meeting, you could try to build into something small if your account size is appropriate for it, just because of the extent of daily chart extension, and expect to have to build in further on the way down if you're doing that. But the better trade if you want to get size is to look for an opening low or look for a hammer candle or something like that that gives you a signal to be a little bit more aggressive on the upside. And that's what I was trying to do in ARC. I saw it trading below 38.50. I saw that it put in its opening low here at 38.36. And I said, I'm just going to put a buy stop here at 38.50. If the thing is really weak, it'll never get triggered. And if it's strong, if it bounces back, if growth is able to bounce back a little bit, then I will, get long back through 38.50 versus the low. And, good opening bounce to above $39. Had me feeling pretty good about it. And this was another one. It just turned into nothing. I guess I was probably a little bit lucky that the opening low didn't break on this pullback at 11 o'clock. But no follow through, nothing happened. I did nothing with it the rest of the day, and I just closed my position out into the close because I wasn't getting a good enough of a profit cushion there to actually do it. I thought that this trade, when I first was putting it on back through 38.50, it really reminded me, and it felt a lot like that buy through 39.50, even similar risk that was back on August 18th. But definitely not the same volume, not the same size of the candle, not the same confirmation at all. So that was kind of a really big focus for me today. Energy was really strong. We identified the relative strength in energy early on today. I didn't really focus on it from a trading perspective, but you easily could have off of that strength. And financials I thought were just I thought that the big financials were disappointing and that KRE treated really well. And again, KRE, unfortunately, I hit out of that last week, but I thought that KRE was actually one of the better names today, period, if you're able to get stock. Great looking RDR back through $41. And this name, unlike most of the names where I was disappointed in the follow through, this name gave great follow through. That opening bounce was stronger than almost everything else, filled the gap, went positive, really strong bounce, pulled back, but not like we're just looking at Arc, and there was a lot of other names where the pullbacks were just like too deep to feel confident that you could really get follow through on highs. This maybe was a little bit longer in duration than I would like. The pivot low only coming in at 11 o'clock. Um, but the pullback here on a percentage basis of that opening rally was very good, very healthy. And this name, again, unlike a lot of the other names I was looking at, instead of a lot of the other names, they just went sideways. They were weaker all day and then got a rally in the last 5 minutes. This at least went into some sort of upside grind throughout the rest of the trading session and closed well. So the KRE was decent. The Bank of America, I know, ended up being off lows, and JP Morgan gave actually a pretty decent looking daily candle. But intraday today, those things seemed tough when I was watching them. So that is pretty much it. I think that's all I got. I think it's a good review of the day. A little disappointed with the follow through on today's trading session, though I did make a few bucks today. That's all I got. So I'm happy to take a look at what you guys have. First, Dave, give me a nice long question here. So let's parse through it. From Dave S. I have an options trade that I have only put on twice so far, but have been back testing and workshopping for a few months that I'd like to share. It is a defined risk on UVixie, where I go short after it spikes and then put on a zero cost collar to make the risk defined. Okay. As of the time I'm writing this out, around 3:45 Eastern today, I'm able to go short at 1575. 3:45, okay, 1575. You are paying for that borrow. Um, with the biggest reason I haven't read everything you wrote yet because it's a lot. I love the idea of shorting UVixie every time it gives pops or generally, and forget, I see that there's more to your strategy for how you're defining risk. It's the thing that holds me back from really ever doing it, and even if I do it, it usually just ends up being a day trade. Is the borrow and then the overnight cost of the borrow. It just can really kind of eke away some of those profit gains because otherwise this thing is a broken product and it pretty much only ever goes down over the long run. But anyway, so you put on you're at 3:45 Eastern today. I'm able to go short at 1575 and put on a collar with a short put at 14, and a long call at 22. A long call at 22 and a short put at 14. Um, for 14-cent credit 2 months from now. The total reward of the trade is that 175 I make between where I am short and the put strike, and the total risk of the distance between 15.75 and $22 protective call, which is 625. Risk reward is around 7-1 in this scenario. However, looking at the historical patterns on UVixie, this trade wins the vast majority of the time, 90% plus easily. And I believe that this is due to the way the product is structured, and it should work regardless of the actual event risk. On a UVixie monthly chart, for the first time where you get two consecutive green candles is the start of the bear market in 2022. And with that loss, the hypothetical trader didn't follow the rules of the trade by having the trade on before the vol actually spiked in the first place. Since this is a newer trade of mine, I am being more conservative with the collar by going further out in time, but I believe you could do this with a much shorter duration if you believe that vol will collapse faster. That part can be moved around at a trader's discretion based on the why of whatever spiked vol in the first place. I put this trade on the second time last Friday, with the first being a few months back, so I haven't had the chance to forward test a bunch of forward test a bunch due to having that many vol spikes, due to not having that many vol spikes during the past few months. But I just wanted to share, as I think due to the drag on the product, it seems to have an edge. Um, thanks, Dave. I appreciate it. I know it's a long one, and no problem at all. My only feedback for you on it, I mean, it sounds great, maybe especially for something for our people who are also trading options to look at. I'm just curious about the cost frictions around it, because the cost frictions are more than just the commission cost of the execution, because this name is always hard to borrow, and I think there's usually a decent overnight hold cost on shorts also. So if you're having a time frame that's a month or whatever on these positions and you need to hold it throughout that, I've never really dug in and done the math myself, but I've always just assumed that the cost of the borrow and the cost of the short overnight carry would weigh out the value of the time decay on any trades that I've ever wanted to look at with you, Vixie, pushing it to the short side. So that would be my only real piece of feedback for you is make sure that you're aware of your cost frictions when you are trading this product to the short side, because in practice, not even in theory, in practice, this name can only go down in the long run. Even some really, really big spikes, and don't get me wrong, this thing can move higher by hundreds of percents if the market crashes. It certainly did during COVID. But this product is inherently designed to go down. So if you could be consistently short the product, it's a great way to make money. But how much of that, unless you're catching one of those faster moves where you have a bit, I guess, and maybe this is a little bit more of what you're talking about, where you get that big spike in volatility, causes you VIXie to really rip up. And then if you come in on the other side of that and time it well, you'll have not only the fact that the VIX is coming back down to earth, but also time decay on your side at the same time. It's just that if you're sitting in this for a month and the market's not giving those bigger moves like it hasn't, and the VIX itself is low, the trade might be a lot more costly in terms of those frictions. But again, I've never actually done the math on that myself, so just worth noting. Um, from Eddie Vic, the flushing close at the end of the day. Does anyone know any catalyst? That's usually just a technical MOC push, or just a move into the close positioning, or a combination there of both. I really think that's all that is. Just also seeing your follow up there, Eddie, to Dave, where you're saying, Dave, correct me if I'm wrong. Traditional collar involves an out of the money long put and an out of the money short call to protect against the long underlying. Your trade seems like a reverse collar to me, where you are protecting your short UVXC with the right. It seems like that's just in the opposite. It's a reverse collar. From Rose Petals, in times like these with extension, what stocks are you looking at? Are you looking at the indices to judge which sector is showing the most strength? Yes. And basing your search from that? Or are you just flipping through stocks looking for a bounce? Yeah, a little bit of both. So the question I commonly get that I don't have a great answer for when the market itself is really extended is, would you rather short, like, so here I can give some examples. So today, right, day four gap down, the market's pretty extended. We're looking for a bounce, right? Obviously understand that premise. So is it better to go after Apple, which is not extended to the downside at all because recently it's been relatively strong, and look for that relative strength to follow through today? Or is it better to go after like an ARC, I guess, as an example, that's just been getting like obliterated, some of these growth names, something that's just obliterated and is the most extended, right? Because the thing that's the most extended has the most room to bounce up to equilibrium, but the thing that's the least extended, it's got the least room to bounce. But the reason why it's the least extended is because it was the most relatively strong. So therefore, if that strength follows through, this could be the better trade. So is this the better trade or is this the better trade? And I think I don't think that there is like a uniform answer to that, where it's always better to go after what is most extended because it gives the bigger bounce, or it's always better to go after what has been the most relatively strong big picture, even though it's less extended to get follow through from that relative strength. I don't have a good answer for you on that. What I tend to do is I like to look for what is actually showing me the strength that day as much as possible. Sometimes even within that first 5 minutes. So, Apple as an example, um, most names this morning, if you look at the spies and the Qs, even though we did get the opening extension bounce, the first 5 minute bar for the spies and the Qs was actually negative. Whereas Apple was the second the market opened, Apple was getting bought up and was being strong. And Amazon, I know, rested in the first 5 minutes like the market did, but pre-market it was also the most relatively strong. I think that's why Pat went after it because it was a name that was green on the day when almost everything else was red. So when I saw how Apple was trading early on, I was like, okay, I think that this is like I want to focus on these types of names. But again, that's just like a very general answer. As I'm looking for what is actually showing relative strength on the day in which we have the extension. And you also could just choose to focus on the indices themselves, whether you're trading the SPYs, Qs, IWM directly, or sometimes I like to trade some of the 3x leveraged ETFs, the T triple Q or the U Pro or TZA for the IWM. You could do that as well because you're really looking at market extension, right? So you're looking for market follow through. I know that what I do in practice, and I don't know, I don't. This is another thing I don't have a great answer for, and I hate not having a great answer for things. Um, but for whatever reason, when the market's really extended to the upside, so I'm doing this in reverse, like looking to short on these big upside extension days as opposed to today where we're buying the big upside extension days. When I'm trading the short side of the market for market extension, I almost always trade the indices. When I'm trading the market long because of downside extension, I will almost always am going after individual stocks. I don't have a great reason for that outside of, for me, portfolio management. If the market's really extended to the upside, I usually will still have longs on, and I could short the market itself as a trade, but it also acts as a hedge. Whereas when we're extended to the downside, and I've already got longs on, which I do, I would almost rather be trading and adding to the long positions that I'm already in for the most part, as opposed to starting new positions in the indices. But you could easily have just, said, instead of trying to focus on an individual sector or whatever, I'm actually just going to trade the index ETFs themselves. But also, what I like to do is find what's relatively strong as soon as the market opens, which today was big cap tech and energy really. But I did take the big cap tech trade. I didn't really focus on energy as much as I probably could have or should have. And I did try ARC, which again was more in the situation of being super downside extended, um, buying on the way up early on in the beginning of the day when I thought that it could show me more strength, and then that strength just weakened out, which also happens. We've seen that happen a lot, especially on an index level with the IWM, where you see something at the beginning of the day, it's really relatively strong, and it gets you excited just for the market to then kind of fail and do nothing. So I hope that helps, Rose Petals. Let me know if you have any follow-up questions. Cool. What else? From Cameron. No problem. Do you know if T3 will be getting DOS Trader Pro anytime soon? We're onboarding DOS Trader Pro at T3 Global. T3 Trading Group is very far away. T3 Global is getting DOS very soon. After that would probably be T3's retail arm. And then if it happens, T3 Trading Group Prop will be definitely last. And it's probably a ways out. But yeah, that's the answer to the question. I think that DOS for global should be done very soon. What else? What else, guys? Not seeing anything really in the YouTube. What's up, Mike? I'm happy to do an early one. Okay, Dave wants a Vegas recap. Who was the most inebriated speaker? I don't think anyone was inebriated that I saw. Um, I missed a bunch of the speakers themselves, unfortunately, just because being someone who is being a speaker, I just I was just kind of stepping away. In the morning, I went to trade a little bit. I went down real briefly in the morning for some networking, and then I was like I was speaking in the early afternoon, so I stepped away. Um, I probably missed half of the speakers in the morning, at least half the speakers in the morning because I was preparing for myself, which I put a decent amount of time in preparing to speak, and I think it showed, which is great. You could tell, and I won't name any names on this part of it, but you could tell that there were definitely people who are kind of pretty well known people, famous people who, felt like they could just kind of ride off of who they are and not necessarily, prepare a specific topic to speak about, which just kind of is what it is. There was a great diversity of speakers. Everything from, guys that were talking venture capital to guys that were risk managers for their firm who were, talking about firm-wide risk management and how that needs to evolve over time and how it hasn't evolved over time. Just like, for example, how you can get the exact same margin on stocks regardless of the volatility of that stock, and different creative ways to potentially adjust for it. Um, you know, Trying to think. I thought that the Nigerians were pretty good. Just talking about option flow in general. They mentioned that they really like the uranium stocks right now. Uh, you know, it was kind of just the two of them batting back and forth a little bit up there. I enjoyed Andrew Left speaking, because the refreshing thing I actually felt about him speaking was that he really acknowledged his losses. And that was my biggest problem with most speakers. Some people, and I won't really name any names, really just kind of got up there and talked about how great they are for like 20, 30 minutes and then sat back down. And that doesn't do anything for me. I don't care for that. Congratulations, you've had trades that were successful and you're awesome. I've had trades that are successful that are awesome too. I appreciate people actually who speak more on the other side of it, and I certainly do that. And a lot of people come up to me and say that my topic of conversation was great. I learned a lot from it, and that it was refreshing because I had no problem talking about my losses. I kind of started with a little bit of a true a junk that was also true, that I got so burned on that flight on Thursday with the market crash and my long positions on and me not around managing them, that my flight to Las Vegas was probably the most expensive flight of anybody that flew out there, and I flew coach. So that one got some good audience reaction. But yeah, Andrew Left really went into his losses on GameStop and Tilray, and that's really kind of what he started by speaking about, and how he felt he needed to take basically some time off from the market after that GameStop situation, that he was getting blown out so bad that he just told his people, his risk managers, like, I'm stepping away. I'm not watching the position. Here's a dollar number. If we're down this amount, hit out. I don't care what the price is. I don't care what's going on. If we're down this amount, hit out. And they hit out. I think he said in the mid or upper 90s. And he's like, sure glad we did that, because otherwise I don't even know if I'd be up here talking to you after the rally that it continued to have, and it was still like a massive loss for them. And then he was like, after that, I needed to kind of take a few months off and recalibrate and reset. And I just told my team, focus on managing our positions and focus on keeping our reputation intact. And I'm taking a break. And I just thought that, I've actually never been a fan of Andrew Left. I used to despise how, I mean, not despise, I just felt it was super unfair that the guy could get on TV after he shorted a position and then say, hey, I'm short this position, and the stock would immediately drop, 10, 15, 20%. I mean, how easy is that? So I used to kind of have some disdain for him. because I just didn't think that that was right that people could do that. But he was pretty good. Uh, who else? Um, Man, my brain is just shot right now. I'm trying to remember everything. I missed Gem speak, which sucks, but I just assumed that I wasn't going to be missing too much because I follow a decent amount of what he says anyway. So I actually missed him speak. I spoke to him a lot after. He's a really good guy. Brian Shannon was solid like always. Brian Shannon's really good. Um, and it helped me to just listening to Brian speak and the way that he trades. He keeps it simple, stupid, which is something that I always say. He's a trend follower, and for him, it's just as simple as analyzing trends of multiple time frames and being on the right side of the trend, and then getting out of the way when the trend fails. And I'm like, yes. In my brain, I'm like, yes, as I'm fighting this Chewy and I'm breaking rules and I'm getting absolutely destroyed in that name, uh, because I thought it was too oversold and, the company is worth more or whatever it is. That's a position that he himself would never ever get stuck in because he just follows trend following rules. And that's you know, in a lot of ways, I think that's the easier money. So I thought that his chat was refreshing. Um, there was a couple guys that spoke about routing, which for me that's a super interesting topic. I love knowing and learning about routing. They spoke the way they spoke was very very dry, so you had to be like extra focused and really paying attention to what they said. But yeah, overall it was a really good event. Day of speaking, and then they put together some cool parties after. Martin Garrix on Friday, and I went to Chainsmokers on Saturday. So it was just a lot of really late nights. But yeah, it was a really cool event. Um, any key points from the speech that I gave? I mean, nothing I spoke about I think is really new for any of you guys. I had 25 minutes to speak. So the problem was like, all right, like what am I gonna do in 25 minutes? I don't think I can really go in and give like a trading lesson. And the other thing was that no one really knows me, like, in that setting. Like you guys know me, but I'm not as well known as Andrew Left is or the Nigerian brothers are or anything like that. So I wanted to try to come in and make an impact, but also introduce myself in some detail. So I spent more time than I probably would otherwise, just kind of talking about my background, my trading career, how I got to where I am today, and then basically talking about how I've seen and worked with hundreds of traders over the years, and that I've seen a lot of people succeed, and I've seen a lot of people fail, and I've seen a lot of people. And this is one of the cool things I just think about this business, is I've seen a lot of people succeed with different strategies. So I don't think that there is some magical golden formula that everyone should be following, or one specific strategy that every single trader should trade. And that's why here in our room, in our virtual trading floor here, I'm very, very open and very encouraging to anyone that wants to provide information on trading that's different than me. Which again, Dave's question there that he just posted, where he's talking about, putting on his reverse collar with Uvixi. I really appreciate that question. I'm not gonna have a tremendous amount of feedback for you on that necessarily because I don't trade options. It's probably not gonna be a trade that I put on, but I'm so encouraged to see that we've already sparked up a chat here between Eddie Vick and Dave on it. And now you guys can provide more information to each other, and you guys can strategize about it, and you're hopefully making other people be more inquisitive to the approach. There are so many ways to make money in this business, and at the end of the day, it always comes down to just math. It's math. It's risk, reward, and probability of success. I don't care what the strategy is. The math has to work. And it's just interesting how many times I've seen over the years two traders try to implement the same strategy, and one guy be successful and one guy that's not. It's the same strategy. So if it's a successful strategy, the trader should be successful. And if it's a failure of a strategy, then the trader shouldn't be. But it doesn't work that way. I could sit down with 10 of you and like show you let's pick 10 of you, same account size, we're going to grid everything in advance. You have the same account size, we're going to have the same risk tolerance, we're going to have the same everything, and I'll give you one very specific strategy to implement. And I'm not going to give you the game plans behind that strategy, just the strategy itself. So it's still up to you specifically on, how you're going to execute, where your stop losses are going to be, how you're going to manage risk, things like that. And I guarantee that if I took 10 people and had them all implementing the exact same strategy with the exact same account size, with the exact same, risk tolerance, but leaving it up to their discretion on how they actually execute it, we're going to see very, very different results over the course of those 10 people. There's going to be one person who doesn't manage risk properly and doesn't want to put stop losses in, and you know just takes losses that are outsized. There's going to be another person that's taking their profit too early and is not involved with any reward maximization. There's going to be another person that trades a lot. There's going to be another person that trades a little, and you're going to end up getting a lot of different, results, even if you make everything else as much as you can the same. I'm a big believer in being strategy agnostic. I have my approach that works for me. I've spent years and years and years kind of developing what I do. Um, but you could do exactly what I do and not be successful, or you could do exactly what somebody else does who is successful and not be successful. So basically, again, and I'm kind of rambling here because it's so shot. Um, is what are the commonalities amongst people that become successful? Because it's not strategy. The commonalities amongst people that become successful is that they are hyper disciplined in the creation of a game plan that's based on rules that is what enables consistency to be there, right? I mean, you guys have heard me say it 1,000 times, and I said it in the speech. What is the goal of being a trader? The goal of being a trader is to be consistently profitable. The only way that you can be consistently profitable is if you are consistent in regards to your actions with the market. The only way that you can be consistent in in regards to your actions with the market is if you have rules for every situation that you can find yourself in that enable you to do that. Those rules are soundly rooted in the principles of risk, reward, and probability of success. And then game plans are basically the manifestation of rules. The game plan that you put on for every trade that you take is based in those rules. And here's the final step, as if all that wasn't difficult enough, you then have to have the discipline to be able to consistently implement that over time. And it's a lot. Um, and that's the reason why some people are successful and some people aren't. So, I genuinely believe that people should learn from as many resources as they possibly can and then put it together in the way that makes sense for them. And that the approach itself matters less than the other things I was just talking about. And that was kind of the gist of my speech, of what I spoke about. And I was happy to see that it was very well received, and I got a lot of really good questions after. So it was good stuff. So that's kind of the Vegas recap. Any, Anything else for today? Um, cool. Yeah, I stopped following along with the chatter here between Dave and Eddie, but it looks like you guys are making some progress. The ponytail is real. I think at one point I bet, well, when we were at one of the socializing events with a bunch of drinks, I bet Josh $10,000, or I offered Josh $10,000 to sneak up behind him and cut it off, but it didn't happen. I did challenge Pete Nigerian to a fight. I didn't really challenge him to a fight. I just kind of made a comment of, Pete Nigerian's a big guy, but I bet I could take him, and it was also well received. Cool. Anything else, guys? Awesome, awesome, Tate. Let me see if I missed anything on YouTube. Michael B giving me some compliments there. I appreciate it, Michael. Glad you're following along. You're curious if I ever experimented with option selling in conjunction with putting on a new swing trade. I have. Um, I did pretty recently, even just a few months ago. I was selling on positions that I was swinging. The problem is that I actively trade my swing positions. So at a certain point, if the stock does certain things, it's actually reward limiting for me and costs me more money than the premium that I bring in. So I stopped doing it. It just wasn't worth it. But that's because I'm trading so actively. Cool. Thanks, Michael. I'm glad you're following along. All right. Well, looks like I got through everything in the VTF and everything in YouTube. It's almost 5 o'clock. I'm like ready for bed. So I'm so like jet lagged in a way. But I was basically up till 6 a.m. Eastern 2 nights in a row, and then this morning was waking up at 6 a.m. Eastern, so my head's all over the place. But it was still a good training session. I was a little disappointed with the lack of follow through today, but the opening buys worked out well on that day four gap down. So I think that was really good stuff. And we'll see how we gap tomorrow, and we'll take it from there. So have a great night, everybody. I'll see you then.